Good evening and thanks for joining us. The top stories today. Good day on Wall Street after Friday's sell-off. The Nasdaq hit a new intraday record. The names of businesses that received over $150,000 in PPP loans has been made public. Warren Buffett's Berkshire Hathaway will buy $4 billion worth of natural gas assets. It's the largest acquisition in over 4 years. And one cosmetics boutique in South Korea has an innovative way for customers to try on their makeup during the pandemic. Stocks started their climb today after last week's sell-off. Investors not so worried about rising confirmed virus cases, it seems. We also had some positive economic data we'll go through later. The Nasdaq hit an intraday record and closed up 226 points or 2.1%. The Dow Jones Industrial Average rose about 460 points, or about 1.78%. The S&P 500 gained nearly 50 points, or about 1.5%. And just before the closing bell, we spoke with Lance Roberts at Real Investment Advice to get his thoughts on the day. Thanks so much for coming on. We saw a bit of a surge in the markets today. I read your article yesterday. You had predicted a surge, but you're still cautious overall, right?
Well, I mean, you have to be just a little bit here. I mean, when you're taking a look at things that are trading, 10, 11, 12 times price to sales, NVIDIA is a good example of this. NVIDIA trades nearly 20 times price to sales currently. Look, it's a great company. They make the chips for all the artificial intelligence and things like that. But, at some point, you've got to realize that valuations are important. And as we enter into earnings season here for the second quarter, the kind of the mantra is we're going to pay today for earnings 2 years into the future. Well, you have to think about that just a little bit, because you're suggesting that you're paying for something today, you'll have no price increase for 2 years waiting for earnings to catch up to you. And, I think at some point that doesn't work out well for investors, in terms of long. It doesn't mean a crash and we're all going to, experience the lows of March 23rd all over again. But it certainly suggests that we're going to have more volatility and lower returns in the future.
Have you seen any improvement in the fundamentals overall?
There's been a little bit here over the course of the last couple of weeks. We have seen earnings estimates come up a little bit for some companies. But again, we also have to remember that there's, probably 1 quarter to, closer to half of companies that are either withholding guidance or structuring guidance in a way because they really just don't have any real clarity about what the economic recovery is going to look like over the next couple of quarters.
And I read a couple of headlines today. They put today's market surge down to, some action in the Chinese stock market. I was a little dubious. I don't think Shanghai could kind of influence the U.S. like that, could it?
No, it doesn't. But when we see action over there, and this is part and parcel of the problem we have with the markets today, is that we are very interconnected between what happens internationally, what happens here, and the algorithms and the robots and the things that trade in the markets and drive a lot of the price action in the markets, they do feed off those headlines. So when you see big headlines coming in from overseas that are very bullish, that tends to get the algorithms working in a bullish manner, driving asset prices higher here domestically. But yeah, it's a little bit of a dubious, the headlines were go buy stocks in China and then people are doing it here. A lot of this is liquidity. We were oversold going into the market last week. We talked about getting a rally last week, and that was a holiday week. So now coming back, we're just seeing kind of a follow through with that. Markets are pushing back up into overbought conditions here short term. But, I think there's a little bit more upside here through the rest of the month.
And any predictions for the market as we come into earnings season?
Well, I think you're going to get a little bit more volatility here. Again, earnings are going to be a little bit suspect over the course of the next couple of weeks and really over the next month or so. But I think the real risk to the market is going to be in August or September. Once we really start to see what's going to happen with the election, if it looks like we're going to have a change in leadership, that could weigh on markets and introduce a little bit more volatility because of over concerns of things like repealing tax cuts, things that have been beneficial for economic and corporate earnings growth in particular. If there's an expectation that may get reversed, markets may not like that so much. So I think the real risk for volatility is going to be in August and September.
Lance, thanks so much for your time. We'll see you again soon. Thank you.
Anytime. Thank you.
And today's rally means that Google's parent company Alphabet is the latest to rejoin the $1 trillion club. They joined Apple, Microsoft, and Amazon. Alphabet had already reached the milestone earlier this year before its price crashed during the pandemic. And gold was up slightly today as well. It's been a solid few months. We caught up with Alistair McLeod, head of research at Gold Money, earlier to see where it might be headed. So, Alasdair, thank you so much for joining us. We've seen the price of gold rise steadily, since during the pandemic, but it's been rising steadily for the past number of years. What do you put it down to mainly?
Well, this bull market, if I can call it that, started way back in December 2015. And I think initially that a lot of that was recovery and, sort of shortage, if you like, of bullion. At that stage, China was a very, very big buyer. Now China less so. I think this current phase really started last year because open interest on COMEX just shot up way above anything we'd seen before. And quite patently, the bullion banks who are on the short side of the deal on COMEX were beginning to panic. And so there was, it appeared like I haven't got evidence, absolute evidence of this, other than what happened in the terms of the price. But it looks like the bullion banks hit the market late February this year to try and drive the longs to close their positions. But the thing that's interesting is that while they closed a lot of open interest contracts, the price didn't go down. I mean, it did initially, but then it just stopped. And ever since then, they've really had a problem trying to close. And where we are now on COMEX is that it's not the normal people who are long, the speculators, the managed money, the hedge funds, the people who never take delivery, the people who want to do a quick trade, the people who are, say, buying gold and selling something else with a view to closing the spread later on. It wasn't them. It's the non-reportables and the other categories. In other words, speculative buyers, and I put speculative inverted commas, who were actually deciding that they wanted to have exposure to gold, not as a trade, but as a serious part of either their wealth, in the case of a family office, or as part of an overall portfolio strategy. And the proof of this was when the June contract came up for, it sort of ran, when it got out to its final dealing date, people started standing for delivery. And this very rarely happens. And certainly the record amount was around about 171 tons was stood for delivery on that active contract. And ever since then, I mean, the bullion banks have really got themselves caught. They just cannot close their positions. And I think they've also got another problem, and that is that in the past, they've always been able to finance larger positions by expanding the credit until such time as the hedge funds ran out of money or began to sort of think, well, it's time to take profits, or were exposed to an overnight hit, which would bring the price down and force them to close because they get stopped out. It wasn't like that at all. And suddenly they find that they can't expand their credit anymore. I mean, we've noticed in other markets like the repo market and also what the Fed has been doing, injecting liquidity into the banking system. There isn't really, I mean, the liquidity is all demanded elsewhere, not in supporting big short positions, neither gold, foreign exchange, swaps, credit swaps, whatever. So you can see that the market making ability in all these markets has declined. And we've seen this in gold. We have seen that you've got bullion banks who essentially are the swaps as described on COMEX. They cannot close their positions. They're probably under pressure to reduce their positions. And so there's a bit of a stalemate. And it's going to be interesting to see what happens when we get to the next active contract running off the board, which is the August contract, and that starts running off the board at the end of this month. How much of that is going to stand for delivery? It's going to be a very interesting question.
Alistair, there's a lot for us to consider. Thanks so much for your insights. We'll be sure to have you back on with the next update. Thank you.
My pleasure, Paul.
The Trump administration has released the names of businesses that received over $150,000 in the Paycheck Protection Program. Let's the public see for the first time where some of the cash went, how many jobs it saved.
The U.S. Treasury and Small Business Administration on Monday disclosed the names of businesses assisted by the Paycheck Protection Program, or PPP. This provides transparency for the first-come, first-served program that has been troubled by technology, paperwork, and fairness issues. The list includes names of nearly 660,000 small businesses that receive over $150,000. It accounts for almost 75% of the loan dollars approved. It also discloses the range of their loan amount, address, business type, and how many jobs they supported. As part of the virus relief bill, the PPP program helps cash-strapped companies keep workers employed. So far, it has approved over $500 billion of forgivable loans and supported over 50 million jobs. That accounts for about 84% of all small business employees. The average loan amount was about $100,000, and over half of the money went to 5 industries, including healthcare and social assistance, professional service, construction, manufacturing, and hospitality. There's about $130 billion remaining in the fund. The application deadline was recently extended to August 8th.
And activity in the U.S. services sector rebounded strongly last month, almost returning to its pre-pandemic levels. The reading is quite a bit higher than what economists had forecasted. The Institute for Supply Management says its non-manufacturing activity index jumped to a reading of 57.1 last month. It's the highest since February. The index fell to its lowest point since 2009 in April. A reading over 50 indicates growth in the services sector. The sector accounts for more than 2/3 of U.S. economic activity. ISM surveys measure of new orders for the services industry also increased sharply in June. And the Labour Secretary says the economy is doing better than expected, and he no longer thinks the extra $600 unemployment benefit is needed. It comes just weeks ahead of when the benefit was set to expire.
Labor Secretary Eugene Scalia said he doesn't think the extra $600 per week in unemployment benefits are needed anymore. Scalia told Fox News that it was a really important thing to do as the economy was shut down and Americans were told they couldn't go to work, but that's not the case anymore. The benefits are set to end on July 31st. Scalia said the economy is doing much better than experts projected, and he's optimistic because the USMCA went into effect last week. President Trump signed the CARES Act in March. It authorized the enhanced unemployment benefits, loans for small businesses, and stimulus checks up to $1,200. The president said he supports sending more stimulus payments to people, and his administration is working with Congress for another stimulus package. House Democrats passed the HEROES Act. It's a $3 trillion stimulus package that would send $1,200 payments to eligible Americans. But Republican senators have said the HEROES Act has too many unnecessary provisions.
And still to come, Uber will buy food delivery startup Postmates in a multi-billion-dollar deal. That and more after the break.
The coronavirus outbreak is the latest wake-up call.
U.S. Senator Ben Sasse put it plainly. The Chinese Communist Party has lied, is lying, and will continue to lie about coronavirus to protect the regime.
In 5 to 10 years, we'll have virtually no manufacturing capacity left for generic drugs. And again, this is 90% of our medicines.
And the world should know, if Hong Kong falls, the whole world falls, okay? Because the Chinese Communist Party is the existential risk of humanity, period.
Since the CCP took power, 80 million people have died from its policies and political campaigns.
They're using our institutions and our norms and our values against us in ways that we hadn't necessarily envisioned towards their own authoritarian agenda.
From the party's great firewall in cyberspace, or to that great wall of sand in the South China Sea.
More repression, more unfair competition, more predatory economic practices, indeed a more aggressive military posture as well.
If we do not meet this threat now, it's going to define our century.
Warren Buffett's Berkshire Hathaway will buy Dominion Energy's natural gas assets for $4 billion. It's Berkshire's biggest acquisition in more than 4 years and will help the billionaire reduce Berkshire's cash pile, while letting Dominion focus on its utilities operations.
Berkshire Hathaway Energy, a subsidiary of Warren Buffett's Berkshire Hathaway Inc., has agreed to acquire Dominion Energy's natural gas transmission and storage business. Dominion is one of the largest utility companies in America. The assets include over 7,700 miles of natural gas pipelines and 900 billion cubic feet of gas storage. The Berkshire unit will also assume $5.7 billion of debt, giving the transaction a $9.7 billion enterprise value. Buffett said in a statement, "We are very proud to be adding such a great portfolio of natural gas assets to our already strong energy business." Buffett has considered the energy business one of the lead dogs of Berkshire's non-insurance group, along with its railroad business. The purchase will expand Berkshire's hold in the sector, adding more infrastructure to its energy operations. Berkshire also struck the deal at a low point in the market. Last month, U.S. natural gas futures dropped to their lowest point in 25 years and have recovered just slightly since. Buffett's Berkshire conglomerate is worth over $400 billion. It ended the first quarter with over $130 billion of cash. The Dominion deal's total value would account for about 7% of that amount.
And in a separate statement, Dominion and its partner Duke Energy said they're abandoning a multi-state natural gas project, the 600-mile Atlantic Coast Gas Pipeline. The project was designed to cross West Virginia and Virginia into North Carolina. The two companies won a victory in June at the United States Supreme Court over a critical permit, but despite the win, the two companies said recent court rulings have thrown into question a nationwide permitting program. It regulates pipeline approval and utility work and water body and wetland crossings. And with the increased legal risk and anticipated delays, the two companies decided it wasn't enough to justify their investment. The cost for the project has increased to around $8 billion from the originally estimated $4.5 to $5 billion. And Uber is buying Postmates for billions of dollars to expand its food delivery empire. Uber's core business, ride-hailing, has struggled during the pandemic, so now it's betting on growing its Uber Eats division.
Uber is buying food delivery startup Postmates for over $2.6 billion to grow its online food delivery business. The two companies have been talking about merging for years. Things only got serious last week after Uber failed to buy Grubhub, a top food delivery app in the U.S. Grubhub was later sold to European giant Just Eat Takeaway for over $7 billion. That merger is now the largest food delivery business in the world outside of China. Postmates is the fourth largest food delivery app in the U.S. It started in 2011 and is a pioneer in offering on-demand meal deliveries in the nation. The new purchase will help Uber compete with industry leader DoorDash, which has a dominant market share of 45%. Uber Eats and Postmates will continue operating as two separate services. Uber's shares are up about 10% from a week ago. It's currently selling at about $32 a share.
And coming up next, Mercedes will recall hundreds of thousands of vehicles in China over possible oil leaks. More on that after the break.
Hello there. Doesn't it feel like we're moving further away from the very values that our republic was built upon? And the media in our country has just been adding fuel to the flame, which is why you need to try the Epic Times. It's pure, honest journalism that's restoring traditional values, and it reports the news with no spin, no hidden agendas, and no false narratives. So if you want to know the truth about the FISA abuse that took place during the 2016 election, or how socialist and communist ideologies have been infiltrating our society, or how the Chinese Communist Party's cover-up led to this global outbreak, and so much more, then you need to check out the Epic Times. And for a limited time, you can try the paper yourself for a full month for just $1, and we'll send you a very special free gift. A giant timeline that's 3 feet by 4 feet, documenting the FBI's abuse of FISA spy warrants. So go to readepic.com and claim yours today.
When you look at TV networks in America, a soundbite and fight-it-out culture prevails on news and commentary programs. As a Canadian, I'm fascinated with America, and I wanted to offer American thought leaders an opportunity to share their thoughts in a deep dive format where we can explore their ideas together. And so American Thought Leaders was born. The world's most brilliant thinkers believed that open discourse was the key to greatness. However, all around the world, we see that discourse is being stifled and political agendas have subverted media. The Epoch Times launched its Global Thought Leaders program to bring back this great tradition of free thought. As the host of American Thought Leaders, every week I interview some of the most intriguing minds on the most pressing issues of our time. Be sure to check out our new episodes every week.
Germany's finance minister says he wants to revamp the country's financial oversight system. His statement comes in the wake of the Wirecard accounting scandal and mounting criticism for failing to step in sooner.
Finance Minister Olaf Scholz said he wants to empower the country's financial supervisory authority, BaFin, to conduct unannounced checks at any moment. He also proposed making sure BaFin has oversight of large payment processing companies, even if they don't fall neatly into the category of a financial institution, and discuss whether auditors need to rotate more frequently. Munich-based Wirecard filed for bankruptcy recently after auditors couldn't find $2 billion that were supposed to be in its accounts. German authorities have been criticized for failing to step in sooner, despite reports of irregularities dating back at least 5 years.
German prosecutors said on Monday they had arrested the head of a Dubai-based subsidiary of Wirecard. And in other news, an accounting watchdog in the UK is seeking to reform the country's accounting practices. The UK's Financial Reporting Council told the country's Big Four accounting firms to separate their auditing divisions from the rest of their accounting operations by June 2024. It's one of the most sweeping changes to the sector globally to help improve audit quality. The FRC discussed a set of principles with the four companies. One principle is to make sure profits distributed to the partners in the audit practice can't be persistently higher than what the practice contributed in profits. This is to prevent the firms from using their consultancy work to subsidize audit practice. The shakeup also includes replacing the agency with a more powerful one and helping smaller accounting firms to compete with the Big Four. And Mercedes-Benz announced a recall of more than 660,000 vehicles in China over possible oil leaks. Most of the vehicles in question were made in China. A seal between the high-pressure fuel pump and a low-pressure fuel pump could weaken over time, causing oil leaks in cold weather. Of the over 660,000 vehicles recalled, 36,000 were imported. This follows an earlier recall for incorrect child safety labels in imported Mercedes sedans. This recall includes vehicles made between February 2013 and June 2017, and it will begin on December 18th. Faulty parts will be replaced free of charge. And up next, find out how one South Korean makeup boutique found a way to let customers try on makeup without touching it. More on that after the break.
Viewers have described China Uncensored like The Daily Show, but about China.
In China, something can be illegal, but still in common practice. For example, bribery, or intellectual property theft, or Uber.
At the beginning, I was super excited when I got 500 views, and now the show's grown to about 500,000 subscribers on YouTube. One episode reached 7.9 million people and counting. I'm a little freaked out that many people have seen my face.
Hey, have you heard of China Uncensored? It's starring me.
It's more and more obvious that China is having a major influence on the U.S.
Hey, have you heard of China Uncensored? 中国揭秘.
In 5 years, I see China Uncensored as the only show on TV or the internet. It will be the sole source of edutainment worldwide.
Have you heard of China Uncensored?
Yeah, I have.
You actually have? He's heard of China Uncensored.
I love China Uncensored.
And one cosmetics boutique in South Korea is getting creative. Amore Pacific in Seoul is using augmented reality mirror so customers can try on cosmetics without touching their face.
The mirror takes a picture of the customer's face and analyzes it. It then recommends products based on skin texture and addresses any blemishes, wrinkles, or dark circles. Customers can then see a computer-generated image of what they would look like wearing a wide range of foundations, blush, eye products, and lipsticks.
Due to the coronavirus, it was uncomfortable to test cosmetics after someone had used them. However, this is very convenient, as I can see the actual color on my face in a form of AR image without even touching my face.
South Korean government guidelines also recommend shoppers try out cosmetics on the backs of their hands, not on their faces. To minimize human contact and limit the risk of virus spread, the shop has also put QR codes next to all products on display, so customers can check details on their mobile phones instead of talking to staff.
It took very little time, and I did not need to talk to anyone before I made my purchases.
South Korea has been praised for how it has handled the CCP virus outbreak. But Asia's fourth largest economy has experienced persistent outbreaks in recent weeks, mostly in the capital.
That's the latest business updates for now. Thank you for tuning in. I'm Paul Graney.